and a warm welcome to our post-earnings conference call for the quarter and half year ended September 30, 2019. I have with me on call Mr. Vijay Kumar, CFO, and Stellar IR Advisors, our Investor Relations Advisor. We hope that you all have received our latest investor presentation and have gone through the same. We have also uploaded it on the stock exchanges and the company's website for your reference. We will begin the call with key business updates, followed by a brief summary on the company's performance during the period and a review, and lastly, move on to the question and answer session. Firstly, we are pleased to announce that the commercial production at the new processing plant has begun. However, currently we are processing for non-USA and non-EU markets, as few of the regulatory approvals for these markets are still awaited. While we have been sharing plant updates on a regular basis, I would like to take you through the key details of this facility for the benefit of everyone on this call. The new facility for shrimp processing is located at G. Ragampeta in East Godavari district of Andhra Pradesh and has an installed capacity of 20,000 metric tons per annum, which is over 2 times of our existing capacity of 9,240 metric tons per annum at the Kakinada plant. Of the 20,000 metric tons capacity, one line of 5,000 metric ton capacity is towards value-added or ready-to-eat products. This is the first time that we are processing cooked or ready-to-eat products in our business. The capex incurred towards the new plant is to the tune of around 108 to 110 crores, which was largely funded by the IPO proceeds and balanced through the internal accruals. Secondly, on our leased operations, as many of you would be aware that along with our Kakinada plant, we also had a leased capacity of 6,000 metric tons per annum. As mentioned earlier on quarterly calls, we plan to discontinue with the leased facility as the production at new plant stabilizes. In fact, our contract for the leased facility has ended and we have already begun to shift our setup along with our team, some of our team members from the lease to the own plant at G. Ragampeta. We acknowledge that the completion of the new plant has been delayed due to external factors beyond our control, but we are now excitedly looking forward to stabilizing the operations and ramping up the capacity utilization. Our other focus area in terms of expansion has been the hatchery operations. As mentioned in our earlier reports, we commenced 2 new hatcheries last fiscal, one at Srikakulam in the northeast part of Andhra Pradesh state and the other at Ongole towards the south of the state, which makes it a total of 4 operational hatcheries, of which one is on lease basis. We are happy to share that the output of the specific pathogen-free SPF seed from the new hatcheries has been received very well by the farmers within the state as well as the states of Orissa and Bengal. And we expect to increase our sales going forward. The construction work for phase 2 at the Ongole hatchery has also started recently. Lastly, in terms of market diversification, we continue to explore newer markets and have forayed into China since the beginning of this fiscal. Although its contribution in our geographical mix is still minuscule, there has been an increase quarter-on-quarter basis. In the last quarter, Q2 FY20, almost 91.3% of our total sales was to the USA, about 7.3% roughly to the European Union, and remaining 1.4% to China. While EU sales continue to be dismal due to the market conditions in that specific market, we remain focused on exploring newer markets across geographies, especially operationalization of the new processing plant. Now on the shrimp demand, supply and pricing scenario, we have seen improvement in demand from our key markets like USA, led by clearing of inventories during the first quarter and the beginning of the pre-holiday season. With that, the global prices of shrimp have also been improved to the extent of 10 to 12% from the lows, but are still lower by around 10% from the peak. On the supply side, the situation has stabilized and initial harvest from the delayed first crop in Andhra Pradesh seems to be normalized. While it may be a bit early to comment on the crop output as of yet, the producers seem to be fairly optimistic subject to climatic conditions and incidence of diseases. Now, as far as the past quarter, that is Q2 FY20 is concerned, we were able to clock sales volume growth of 2% year-on-year and 4% quarter-on-quarter to 3,745 metric tons. This, coupled with improved realizations on the back of higher prices in general and a favorable product mix in particular, led to an increase in overall revenues for the quarter. Additionally, our farm and hatchery operations, along with operational efficiency, led to better profitability. When compared half-yearly, please note there was a one-time refund of around rupees 11 crores on account of anti-dumping duty in the first half of FY19, that is the last fiscal. That is largely on our business and industry updates. We continue to focus on optimally utilizing our capacities and strive to reduce costs through backward integration and valuation to product offering. That is all from my side. I will now hand over the line to our CFO, Mr. Vijay Kumar, to brief you on the financial performance for the quarter and half-year ended September 2019. Post that, we would be happy to take the question and answer session. Over to you, Vijay.
Good evening, everybody. I am here presenting you the highlights of the last quarter and half-year ended September 2019. In Q2 FY20, the company reported total income, including net revenue and other income, of rupees 275 crores, as against rupees 260 crores in the same period of last fiscal, and rupees 226 crores in Q1 FY20. The volume sold in Q2 FY20 stood at 3,745 MT, marginally higher than 3,688 MT sold in Q2 FY19, and almost 4% higher than 3,606 MT sold in Q1 FY20. The average realization, including other income, in Q2 FY20 came in at Rs 733 per kg versus Rs 716 per kg in Q2 FY19. At the EBITDA level, the company reported Rs 42.3 crores in Q2 FY20 as compared with Rs 33.5 crores in the same period of last fiscal and Rs 16.4 crores in Q1 FY20. The profit after tax stood at Rs 22 crores in Q2 FY20 as compared with Rs 20 crores in the same period of last fiscal and Rs 8.2 crores in Q1 FY20. The key figures for H1 FY20 were as follows. Total income of Rs 500 crores versus Rs 508 crores in the half year of last fiscal, which included one-time income of Rs 11 crores. EBITDA of Rs 442 crores against Rs 438 crores in H1 FY19, and profit after tax of Rs 30 crores against Rs 41 crores in the same period of last fiscal. The total volumes sold in H1 FY20 were largely flat on year-on-year basis at 7,354 metric tons of shrimp sold. It is all from our side. I would now request the moderator to open the call for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder, you may press star and 1 to ask a question. The first question is from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi, good afternoon team. Couple of questions. What's the export incentive which was booked during the quarter?
Good evening, Nitin. Hello.
Yeah, Chaudhary.
This is Vijay Kumar. For the quarter ended 2019, duty drawback is around 6 crores 9 lakh 36,176. MEIS, hello?
Yeah, 6
Hello?
crore 9 lakhs.
And total including 22 crores 10 lakhs, including MEIS.
Sorry, I didn't catch the number.
The total export benefits are 22 crores 12 lakhs.
22 crore 12 lakhs. Okay. Okay. The second question is pertaining to the farm gate prices during the quarter. How did they move?
The farm gate prices during the quarter, they have been stable. In fact, there was some a higher demand than expected from the market of China and Southeast Asia in general. So the farm gate prices actually have moved up. They stabilized, they firmed up actually compared to the first quarter. And that's mainly because of the demand which picked up significantly from the Southeast Asian countries, and mainly China especially.
Okay. Broadly, I recollect last time when we discussed, the farm gate price was around 305, 310. For the quarter, it would be in the similar range, or it has moved up?
The raw material, the farm gate prices have actually moved up by another. For the quarter, it has gone to almost the company's case, it was 369 rupees. It moved up for the second quarter. Yeah.
Okay. So why would it mean a big jump, around 10% procurement cost going up versus last year during the same time?
Yeah, I mean, as you would have noticed, even the export prices also have jumped up, which I had explained earlier. Yep. So naturally, in tandem to that, raw material prices also have moved up.
And one last question is, since now we are releasing the facility which was on lease, this will help us to save how much? Around 16 or 20 crores?
Approximately around that level. We have already released, and we are just moving it in phases, shifting the teams to the new facility and infrastructure, some of our infrastructure as well as some of the product stocks. So we will be saving around that level, 16 to 20 crores.
Okay. And the new facility which is now getting commissioned, the upfront cost of commissioning this facility, if you can articulate the cost. I mean, there is variable cost, which is the employee cost. As you keep scaling up, you keep on adding up people. But there is otherwise a fixed cost of maintenance and electricity and etc. Irrespective of volume, there is some cost that you have to incur. If you can articulate that.
No, but the first main thing is, as you are aware, that we would be transferring our capacity. We are already in the process of transferring our capacity from the leased facility to the new facility. In fact, we would be the saving. I need to correct my earlier statement. The saving would not be to the tune of 16 to 20 crores. I made a mistake on that. It would be around 7 to 8 crores, because still the costs, the manufacturing costs, would still be continuing within their own facility. You understand what I'm saying? So the actual cost which was incurred by the company at the lease premises was 16 to 20 crores. In that, about 50%, minimum 50% of that would be saved when we are moving up to our own facility. So now when we are transferring this capacity to the new facility, the costs which are required towards the power, electricity, and the minimum costs which are required for the fixed costs which will be there, they will be expensed. So we are just transferring. As we are moving them, we will be basically shifting part of our costs which are already incurring in the lease facility to here. That's why, and we'll have some additional costs like the electricity which you mentioned. So we will have a saving of around 8 crores per annum compared to the past lease operations.
Oh, sorry, I got a bit confused over here. So you are saying 16 crore is the lease amount which we are paying on the lease facility?
Yeah. Yes.
And the new cost, if we were to release those lease facility, we'll be saying 16 crore, but we are also going to incur the fixed cost on the new facility, right?
I was saying we would save around
7 to 8 crores when we compare to the by switching to our own facility.
Okay. Got it, sir. Thank you. I'll join back to you.
Thank you. Yeah.
Thank you very much. The next question is from the line of Ashish Thakkar from Motilal Oswal Financial Service. Please go ahead.
Yeah, thanks for the opportunity.
Ashish, sorry to cut you off. Can you please speak a bit louder?
Yeah, I'm audible now?
A little bit.
Yeah. So my question was on China. If you compare the realizations vis-a-vis the US market, and so in the same perspective, if you could help us understand how the market dynamics are.
See, China traditionally is a commodity market. Yes, the realizations when you compare to the realizations from China would definitely be on the lower side when compared to the US or the European Union markets. But at the same time, there are also requirements for certain value-added products in the ready-to-cook category itself. Some of the products which are being exported to USA and European Union are also being requested from the Chinese market, which we have noticed in the past 2 months as we have started actively exploring and also started catering to their needs. So the realization part, it would be approximately, it's a mix. So commodity to commodity, there would be, if you see, the US will be paying a little higher price. The main point is the size. The grades which are used for Chinese market are different from the grades or the sizes which are used by the US and the European market. So that's one of the major reasons why the realization also would be lower, because we will be mostly dealing with smaller sizes when it comes to the Chinese market. So you understand what I'm saying? It's not like product to product there's a difference. It's more because of the sizes. So if we are looking in that way, the realization to China would be almost like $1.50 to $2 per kg lesser when compared to the US market or the European Union market, because the US and European markets mostly require medium and large sizes, while the Chinese market requires smaller sizes.
Okay. And would be helpful if you could share some light on the European markets, because I guess even those markets have not opened up for Indian players?
The European markets are open for the Indian players. In fact, we have been doing quite well until last year. It's just that the demand situation from European Union has been little slow in the current year. But there are certain markets which we got access to, which are more, which are requiring specific products which are certified and in compliance with certain standards. Unfortunately, since we worked on those standards and certified products quite a few years ago, now we could easily gain access to those markets, and so there the European Union overall demand has been slow, but specific demands regarding specific products, certified products especially, and also certain specific products are required. But however, yes, overall our sales has come down to European Union, and the sales for the past 2 quarters has mostly moved to the United States. But we are still looking forward to increase our European Union business now, especially with the new factory coming in line. So we should see how we going ahead. We should see how it goes.
Okay, fair enough. Last question also is MEIS scheme. The government was like about to replace this scheme. So if you could help us understand how the things are panning out here.
Yeah, as you had rightly said, in fact, in your own words, you had mentioned that government is planning to replace the scheme. And of course, when they have mentioned this point, so that the scheme could be more WTO compliant, they also emphasized and mentioned that it will be replaced in such a way that the benefit or whatever the final end benefit to the various industries covered under these schemes are not affected. So we still, as of now, have not yet got any clarity on how they are going to bring it up. Most likely, maybe we may hear about it in the next foreign trade policy announcement or more towards the end of the financial year, because mostly we got the news that it may be extended from December end to March end. So before the end of the financial year, they will definitely work up on the new scheme, subject to it not having any major impact on the final benefits given to the various industries across the country.
Okay, fair enough. Thanks, and I'll get back in the queue.
Thank you very much. A request to all the participants, please restrict to 2 questions per participant. The next question is from the line of Praveen Sahay from Edelweiss Broking Limited. Please go ahead.
Thank you, sir, for taking my question. For this new plant, can you have a segregation like how much is capacity for ready to cook and how much is for ready to eat?
Yeah, I did mention that in the opening speech. Among the 20,000 metric tons capacity for the new plant, 15,000 will be ready to cook and 5,000 will be ready to eat.
Okay. And also, as you had mentioned earlier regarding the farm gate prices, so is that the RM unit cost for Apex you had mentioned, or that's the farm gate prices you have mentioned that 369 rupees per kg?
So the 369 was for the cost for Apex, number one. That was the average. One important point which we need to make a note of, whether it is the farm gate prices or the sales prices, we are looking at an average. Remember, it is even at the raw material scenario, it is multiple sizes of product, and naturally it depends on, it's an average of various sizes which we have purchased. So we are talking about a range of purchase starting at anywhere between 150 to 180 rupees all the way to 550 to 600 rupees. However, when we mention that the unit per kg unit value of raw material cost, it is, say I have just mentioned for the last quarter it was 369 rupees. It is based on the average of various sizes which we have purchased during that quarter.
Right.
So that is for our company. Now, when you ask for an industry, I don't think we'll be able to answer a farm gate price in general unless it is specific to a specific count, to a specific size, you understand?
Yeah, so we can, assume the 30 count, how much is the average farm gate prices last quarter?
Around 450 to 470 rupees.
Okay.
470, yeah.
And how much is an average 30 count for India import realization?
You mean export realization?
Export, sorry.
Again, there it depends on what products they are getting packed. If their 30 count is being used for a commodity product, it will be at a different level. For example, for a commodity level, it is around $10 per kg, for example. But if it is going for more value addition, it goes to $10.5, $11, and further, if it is ready to eat, it could go almost $12 to $13 also. So specific sizes are one part, and then also the specific products. When it comes to exports, it's also the products which affect the realization. So what products we are doing. So for China, as I mentioned, it's mostly commodity. So the base level pricing will be there for the Chinese market.
Okay, thank you, sir.
Thank you.
Thank you very much. Anyone who wishes to ask a question, you may press star and 1. Next question is from the line of Jatin K from Alpha Capital. Please go ahead.
Hello sir, congrats for a decent set of results. So my first question would be on this new shrimp facility. Since it is not catering to US and EU, what all approvals will it require and how much timeline would it happen? And what would be the margin in case there is a lot of time if we do not get these US and EU approvals?
Mr. Jatin, first thing is the new facility, as I mentioned in the opening remarks, it has been catering to the non-EU and the non-US business as of now because of certain approvals still pending. But main thing is already those approvals are in process and we are just waiting this week, next week. So we don't really foresee a major delay or impact of in those approvals which will have any impact on the business front. So meanwhile, however, we are utilizing the capacity for other markets. Mainly the approvals are pertaining to from the government of India, even the US FTA which is there. So we have already just finished our US FTA registration and we are going to start our shipment soon. So we're just waiting for certain clearance from the government of India, which will be done most likely this week, I think, with regard to the US and the European Union also, hopefully before this end of this month or early next month. So otherwise, yes, we have started utilizing the capacity for other markets, like mainly China, of course, commodity, and also we are planning now to move into the Middle East.
Okay, sir. And sir, other expense has gone down this quarter to 37 crore from 42 crore YOY. So what was the reason and what is the sustainable rate of this other expense should we be assuming going ahead?
See, the major part of other expenses is regarding the storage and the processing charges which were being mainly paid to the third-party service providers, whether it is public cold storage or the leased facility, for example. That is one. And the other major important point with regard to the expenses is also the foreign exchange deficit. This was higher last year when compared to this year because of the stable currency. Fortunately, we had so far this year and not having much impact of any negative impact because of the forward contracts also which we have. Because of stable currency, we could minimize that loss of foreign exchange deficit which was there last year. So that expenditure was higher last year. That has come down this year. But I would not be able to comment or commit anything about the foreign exchange fluctuations. As you know, it is beyond anyone of our control. However, the expenses pertaining to storage and processing expenses which were paid to third party are totally done and we are not going to have them anymore, which I had also mentioned to one of the earlier callers that we would not be paying any more lease charges since we have got our own facility. So those savings will definitely are sustainable going forward for sure.
And sir, any volume, revenue and margin guidance for second half as well as next year?
At this point, we are just looking at transferring our leased capacity. Now, the volume regarding the ready-to-eat, primarily we are really looking ahead to pick up that volume during this quarter and mostly for the last quarter of the current financial year. So as far as the volume is concerned, at this point, we would definitely say that we are going to do more than what we did last year, but I may not be able to give you at this point specific percentages or specific numbers with regard to between the ready-to-cook and ready-to-eat. But our objective, our main aim is to produce more of the ready-to-eat because now we have that capability and as well as the capacity. So we look forward to utilize that capacity and, so that more volume in that capability enhances the value realization as well as margin. So it has an impact on the total business as such. So for sure, the next half also we will be looking at doing more volume than last year. We are already in that process. I can't get into specifics though at this point. I hope you can understand that.
Sure, sir. The balance sheet. So, any reason for the same?
Sorry, can you repeat?
Jatin, our line is breaking. Can you please come in a better reception area?
Sure. I wanted to know in balance sheet, inventory and receivables are up. Can you please explain that?
Yeah, with regard to the inventories, if you would have also noticed that our purchases also have significantly increased in the second quarter, mainly from the raw materials which were increased. And the inventories, of course, those inventories would naturally translate into better sales into the subsequent quarter also, which is the way. But as far as receivables are concerned, as you know, we have been going more aggressively in the hatcheries also. We have had more of our customers who are mainly farmers, where the hatchery seed sales has been tremendously picking up after the successful growth of the new seed being produced in these new hatcheries. So naturally, the customers or the farmers who are there, the primary producers, their the funds which are the payments which to be received from them has made this happen, which is higher receivables from them.
Okay. So, sir, in higher inventory
Sorry
means
to
we are
cut you off,
fully...
Chetan. I'll request to come back in the question queue for a follow-up question.
Sure. Thank you.
Thank you. The next question is from the line of Vincent Andrews from Geojit Financial. Please go ahead.
Hello, sir.
Yes, please.
Yeah. You have mentioned the RM prices is around 369 rupees. I consider it is a weighted average, please? So last quarter, can you please mention how much it was for the last quarter?
1 minute. Yeah, last quarter it was 298 rupees, or almost 300 it was in the last quarter.
Okay. So there is a sharp increase. Okay.
With regard to the increase, I've been saying that repeatedly. It also depends on the sizes which we handle during each quarter. So it's not like overall the increase could be 10%, but if our sizes which we have been working with in the subsequent quarters or subsequent quarters together are of different nature, they will definitely have an impact on the raw material price. So please keep this in mind.
Yeah. So how much do you expect for the full year? Is it any range? Can you tell?
I wish I could tell that. Personally, I'm not in a position. We are not in a position to comment of how the market would move in the next 4 to 5 months. Now, especially there's a huge demand for this holiday sales requirements. So there are a lot of orders which have been placed even from newer markets. So that is one of the reasons why the raw material prices overall have increased. They could be maybe softening a little bit, and I'm not sure, but it will be hovering between the 300 to 360 range, somewhere in between. Yeah.
Okay. Thank you. And can you please share maybe purchase volume in quantity?
The raw material
volume.
The quantity which was purchased during the quarter?
During the quarter.
5,400 metric tons.
5,400. Yeah. Thank you. And last question, sir, in the balance sheet, actually you have mentioned the capex amount was 110 crore, and still the capital work in progress is around 108 crore, and I have noticed that the fixed asset has increased by around 34 crore. So it belongs to what?
I'm sorry, I didn't follow your question.
Actually, the fixed assets has increased by around 34 crore. Still, the capital work in progress is still around 108 crore. You have mentioned in the opening remarks that the capex amount for the new facility is around 110 crore. So there is an additional amount of 34 crore is there in the fixed asset.
Yeah, one of the most important point is in my opening remarks, it was primarily about the capex pertaining to the greenfield processing plant.
Yeah.
The fixed assets of the company do not constitute only the processing plant, but it also has other areas like hatcheries and farms, which are also being simultaneously being invested utilizing internal accruals. So, to tell you the truth, in fact, apart from the processing plant project, which is completed now, utilizing the IPO proceeds majority, there are also other projects which have been simultaneously going on. And I also mentioned in my opening remarks that the phase 2 construction of our new hatchery is also started. All these new other projects also add up to this capital work in progress. It's just not the processing plant, so please keep in mind.
So the line for the participant got disconnected. We move on to the next participant.
Okay.
The next question is from the line of Nitin Awasthi from East India Securities. Please go ahead.
So firstly, congratulations that the new plant has come on stream. It's really a big achievement for an organization to get a plant which is to more than twice the original capacity of the organization. So kudos to that, sir. So now that the plant has come on stream, what will be the tax rate? Because I believe there are some tax benefits associated with this plant.
Yes, Nitin. Thanks for being there also, and as you know, it's there are so many factors involved in this country for opening a project, and thanks for understanding that it's not some of them which are not even in anybody's control. And the main thing with regard to the tax benefits, yes, there are certain tax benefits for food processing facilities. However, we have not yet factored any of those at this point because we are still deliberating even the new tax regime which has just been brought in by the finance ministry recently, and about the new scheme which they have announced. So as such, the tax benefit is for the first 5 years, it is 100% on the operating income where the MAT will be applicable. So we have not yet concluded on which tax structure we would follow as of now, and we would be mostly concluding that decision and implementing that tax structure most likely by the end of this quarter, that is the third quarter, or definitely for sure before the end of the financial year, which it has to be done anyway. So we just still working out on those because there are certain conditions which are stipulated in either of the tax schemes, whether it is the exemption part for the new food processing facilities or the new scheme of this 22% which the government has announced. So we'll be deciding on that more during this quarter, and we will let you know more with the results of the current quarter, or most likely for sure wait for the last quarter. Sure.
Okay, sir. So second question was pertaining to the hatchery business. As I'm seeing that you are expanding quite rapidly in this segment, where is the sales exactly being booked?
It is actually in the other sales. It's in the sales of products, but it is in the other income, if you can see. Hello?
Yes, sir. Yes, sir.
So in the other income, it has it's in the revenue from operations, in which the export sales was already explained. It was 400 and for the quarter ended it was 242. The seed sales, for example, has gone 6.5 crores for the quarter.
Okay, so 6.5 crores this quarter. What was it in the previous quarter, sir?
For the previous quarter, it was 2.7 crores.
2.7. And with the existing capacity, how much is this scalable up to, sir?
There are certain constraints also. As you know, hatcheries are pertaining to livestock business. So we should be looking at performances similar to Q2 levels, but as you know, the livestock is not stocked. It's not stocked throughout the year. There are also seasonalities and the right climatic conditions which make it conducive at the farm level. So for sure, in a 9-month business, we should be going in similar level as this of around this 6 crore odd. We should be definitely looking at it at that level every quarter. That's what you're asking. At what level it could be growing, right? That's what you're asking.
Yes, sir. Because now you said the phase 2 of your hatchery of one of your hatcheries is also going to come on stream soon. The construction started.
So that will be coming up only in the next financial year. I mean, because it will take time. We were supposed to complete it by December. Again, some policy changes, whether it is the central government, state government, various reasons are there for any project to move and commence production. So we were actually originally planning to complete it by December, but it got stretched into almost to April because some policy changes. I don't want to get into specifics on this call, but those changes have affected it. So it will be available from next financial year. Now the other important point which I just mentioned to you is it is pertaining to livestock. So when we are also adding these additional phases in the hatchery business, it is just not to scaling business. It is also to have continuity in business, because in livestock we need to have shutdown periods. So it just doesn't work in such a way that you do it on a continuous basis. You understand what I'm saying? You also need to shut it down and go through the disinfection process, etc. Because otherwise the next cycle's productivity would get affected. So in order to have a continuity rather than having a break in our business, we have planned for this subsequent phases, and that phase would definitely help us from FY21 for the full year, because now we know that we'll have it ready since April of next year. So that is it.
Yes, sir. Thank you, sir. That answers all my questions.
Thank you, sir.
Thank you very much. The next question is from the line of Yogan Sheswani from Metal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. So my first question is regards to the disease news that we keep hearing from the industry. So how's the situation on ground? Do we see any significant impact of any disease or something, or the things are progressing at a normal way?
I'm sorry, I didn't catch your name.
Yogansh.
Yeah, sorry. Yeah. See, Yogansh, the main thing is disease is there. It will be there. We are not surviving in a disease-free environment. Now, how to manage the disease is the key part for any successful crop, or whether it is aquaculture or agriculture. Now, in the case of aquaculture, yes, we have been having incidents of diseases over the past years, and the farmers also have been using newer techniques and strategies to manage the disease. Apart from that, now we have noticed with the new hatcheries which we have brought in and the new brood stock which we have been bringing in, we are having a good healthy brood stock compared to the past, because the growth rate has been observed to be quite significant in a shorter period, which thereby has a very good impact for the farmer at the cost level, because the survivability, even though there is a loss of survivability because the growth is higher, it is at a higher rate, it definitely gives a better result for the primary producer. Disease is mostly got to be managed, and how each of these individual farmers across the states and the country, to be precise, manage it is based on the infrastructure, what they have, and the methods which they implement.
Fair enough, sir. Secondly, sir.
Hello.
Hello.
Yogan, can you please speak a bit louder?
Is it better now?
Yeah.
Yeah. So secondly,
the management line is disconnected. Please stay on the line while we join them back to the queue. patience, ladies and gentlemen. We have the management line connected back to the main call, so go ahead.
Yes. Secondly, on the capacity that we have now increased, and so we have more than doubled our capacity. And can you just tell us a bit more about how you can scale it up and how the industry is going to grow? What kind of thoughts do you have for filling up this new capacity? Like, is there any target that in the first year you want to fill it up till 50% or something like that? Some broad numbers that you could share with all of us.
So we first we'll get to the utilization part. We'll talk about the scaling later. With regard to the utilization, what we need to understand here is we in an optimum capacity utilization, we are looking at around 16,000 metric tons, say, to be achieved over a period of time, supposedly even next 2 years, 1.5 to 2 years. Basically, I mean, this year we were supposed to begin this almost in the early part of the year, but it got delayed. So now in the 16,000 or 20,000 metric ton, which is say the optimum utilization is around 16,000. If we look at it, 6,000 is a transferred capacity, basically from the leased to own. So out of 16,000, 6,000 is more of a transfer of business from a leased facility to own facility. And in the remaining 10,000, it is 5,000 is ready to eat. That's the cooked product. The ready to eat capacity for which the customers are already in place, and in fact, there were also delays for us on the project. We were just waiting for this products to take off, and we already started production to the other markets other than the main markets. We already started production of the ready to eat too. So as we scale up, and we already have the business for those 5,000 metric tons of ready to eat. We are not apprehensive, or we are not having any apprehensions or any sort of doubts with regard to the utilization of the 5,000 metric tons of ready to eat capacity, which has already been, because the customers are in place, and they have also been as eagerly waiting for this capability to come into production as the company also. So we are not worried about it. It's the remaining 5,000 metric tons of the 16,000 which we can still scale up. That is where we want to utilize other markets, the newer markets. So in this 20,000 metric tons, if 6,000 metric tons is more of a transfer of business from the leased, and 5,000 ready to eat is pretty much taken care, majority with the existing customers who are just waiting for those products from the company. And the remaining 5,000 metric tons which is there could be dedicated to these newer markets over a period of time. We believe we will definitely be able to optimally utilize it to that 16,000 metric tons before the end of, for sure before the end of March 2021. March 21. Before March 21, we'll be optimally able to utilize it. That means out of that 20,000 metric tons, we'll definitely be able to utilize the 16,000 metric tons for sure. So it is going to happen in phases. We are very confident that we'll be able to utilize the ready to eat sooner than originally projected. So that is with regard to the utilization of these capacities. As far as scaling up means adding any newer capacities at this point, we are not really looking forward to add any more capacity in the present formats. We strongly look forward towards improving and enhancing our capabilities with regard to value-added products, and henceforth any further expansions with regard to processing infrastructure of the company will be mainly focused on value-added products only. That is where we are looking forward to in that part. That whenever it happens, it's not immediate, but for sure the future plans are in that direction.
Understood.
I think that answers your question, sir.
Yeah, perfect. And sir, what about the industry growth? Like, what's your expectation for the overall industry? How do you look at that now that we have touched around 6 lakh tons of shrimp export? So going forward, how do you see that? And especially the point that you mentioned about looking at the other economies, not just US. So, what's your expectation of growth at an industry level?
We have, come to the understanding that in coordination and communication with our customers, we kind of have an understanding of the market that India's 6 lakh odd or 7 lakh whatever metric tons it is would be more absorbed by different markets if the products are also offered in a different ways. And the traditional products, the commodity products may not be, especially the commodity products may not be going as it is into the future, especially taking note of the expectations of the millennials, how their consumption patterns are, and how their preferences have been evolving over a period of time. We believe that the industry could have slow but steady growth, and it may not be an aggressive growth as such, because as we develop our own capabilities of these ready-to-eat products, we can definitely produce even for markets like Australia and other East European countries, subject to the government having its dialogue with those respective governments. So we really look forward for that, and that is the need of the hour for our industry, is the government of India having better dialogue with the foreign governments and opening up newer markets too, which have been temporarily on hold for quite a few years in the past. So as those come up, and for sure the government is also focused on increasing the exports, so they are also taking measures and the required steps. For sure, those steps and measures should be able to aid the industry to grow in a steady basis, if not in an aggressive and a rampant basis.
That's it from my side, and good luck to you, sir.
Thank you.
Thank you. Next question is from the line of Dipesh Kashyap from Equirus Securities. Please go ahead.
Yeah, hi sir. So the export incentive number of 22 crore that you gave in this quarter still comes to...
Sorry, Dipesh, sorry, there was an error on that. 1 minute, please. There was an error with regard to the export incentives which you have mentioned. You just corrected.
Yeah. Well, yeah, that is net export benefit is 17 crores. Hello? 17 crores. 17 crores, 6 lakhs. Net export benefit. Okay. Sir, our understanding was that from July this year, there will be a 2% reduction in MEIS. So that has happened, or that is yet to happen?
That has not happened.
Okay.
And as of now, the government has not issued any notification as such with regard to that in that respect. And as also one of the callers also asked earlier about the continuation of the schemes, definitely the government is focused on bringing this into the compliance of WTO norms. So we do understand that they are going to replace these schemes in such a way that the benefit is not reduced in any manner to the industry, not just our industry but other industries also.
So the new scheme will replace the entire the 7% MEIS that we used to get, or the 5%? So which they 2% extra that they gave last year. So that will be also replaced, or that will go away from December?
I wish I had an answer to that, because the government has not yet given a clarity on that. But considering the present scenario of the way the exports are, I'm pretty sure the government may be continuing the entire scheme, which is under a different format.
That will be great. Okay, sir, on the margin part, if you can help me understand, our listed peer does like 25 to 30% of ready-to-eat products, and they still reported 10% EBITDA margin due to sharp increase in RM prices, while you have given 14% margin without any ready-to-eat contribution. So just wanted to know your thoughts about it, sir.
Can you repeat your question just now? Sorry.
Listed peer reported a 10% EBITDA margin, and they do 25 to 30% of ready-to-eat products, while we do not do any ready-to-eat products, but still we had like 14% EBITDA margin this quarter. So I just wanted to know your thoughts, like how was it possible?
Because one of the most important point in this quarter and also the subsequent quarters is going to be, apart from the ready-to-eat capability and the business derived out of it and the margins earned out of that capability going forward. One of the most important points was the backward integration part with regard to the hatcheries and farms did have a significant impact, which I also mentioned to the earlier callers about increasing sales, and the margins in general have also had an impact on the current quarter. So, considering that our scale of operations with regard to hatcheries are continuing in this manner and they're only going to grow in a steady basis, and also added to that our ready-to-eat capability coming in, for sure, maybe we should be looking at sustenance of these margins. We should see how things go by going forward. But the majority of the savings, as you see, the cost was also not just pertaining to the margins from the sales that exported, but also you see there were also cost reductions which had happened, which were attributed to various factors, whether it is lease facilities, storage facilities, also the foreign exchange deficit related points which were there. So this is all in a stable currency environment. So which I also mentioned that is nobody can guarantee about how the currency will move going forward also. But that was the main reason. Our backward integration and the reduction of costs, the hatchery sales was a major boost. And now when the ready-to-eat comes up, hopefully, like you said, that 20% or 15% or 25% going into this quarter and next quarter, so hypothetically last quarter, that is current financial year. So definitely we should be looking at more margins. Okay? That's how it's
Cool, sir. Thank you. All the best.
Thank you.
Thank you very much. The next question is from the line of Prakash Bua, an individual investor. Please go ahead.
Good evening.
Yeah, good.
Congratulations for excellent results. Now I think the company Apex Frozen has come to the stage of ready to earn, I believe, ready to cook and ready to eat. I compliment you, and most of the questions have been answered very well. I just want to know how many shifts will be running the new plant presently and future. Will it be running 2 shifts or 3 shifts? And what about the realization, the varieties that we have introduced or we are going to introduce in ready to eat, that I want to understand. And which countries we are targeting? Is it China or some other countries also?
Yeah, Mr. Prakash, the first thing with regard to running of shifts, at this point it is being run under 1 shift, but we will be running 2 shifts maximum. We will not be running it for more than 2 shifts for the most part of the year, unless during peak time, if the need arises, we may look at running it for the 3rd shift. And your second question with regard to the the ready-to-eat component realization part, we believe we have answered that question in the past several times.
How many varieties will be in ready to eat?
See, you need to understand, it is cooked product. In that, of course, different pack styles, different type of packings will be there as per the customer specifications, which are for each individual customer requirements. It's not a general thing. But generally, if you want, as I mentioned, it is cooked product. So that is the difference between the present format and, the earlier part when the company never did cooked product, which I also mentioned in the opening remarks. And now we are starting with cooked product. So in that, different specifications, different pack styles will be as per each individual customer needs.
Are we working on brand creation of brands as Apex, that we have not been working for the last 2-3 years. So there will be a specific brand creation, investment into brand of the company, Apex as a processing company, so that we get much higher realizations.
Mr. Prakash, the present format of business is still B2B. For sure, in a B2B environment, business environment, We mostly are placing the products in the customers' brands, whether it is in retailers' brands or the food service companies' brands, which itself is an honor for the company to pack. Means they have deemed us to be eligible, and our standards are acceptable to them. As we develop the business of more B2C, whenever it happens in the future, we will definitely put our efforts and focus more on building up our own brand, because currently in the export markets it's all B2B at this point.
Okay. Thank you.
Thank you very much.
Thank you very much. Ladies and gentlemen, due to time constraints, that's our last question for today. I will now hand the conference over to the management for closing comments.
Thank you. Thank you everyone for your participation. In case of any further query, you may get in touch with Stellar Investor Relations, or feel free to get in touch with us at ir@fxfrozenfoods.com. Thank you and have a good evening ahead.
Thank you very much. On behalf of...
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.